I propose to abolish the so-called angel tax for all classes of investors.
Well, startups and investors couldn't have expected sweeter words from the finance minister as she fulfilled their decade-long demand to repeal the angel tax in Budget 2024-25. Investors are terming it historical and an epoch-making move which marks a red-letter day for the long-term growth of the private capital industry. While founders are relieved that they no longer have to fear unexpected tax notices, forego a portion of their funding or suffer the pain of navigating cumbersome regulations, crucially, the abolition of angel tax has come at a time when startup funding has hit a 5-year low, and the move is expected to add some oomph, perhaps, to startups, unlocking more domestic capital, especially from family offices. It's also likely to spark greater interest from foreign investors who bring most of the money for Indian startups. That's not all. There was more cheer for the Indian startup ecosystem with the finance minister announcing an end to the disparity in long-term capital gains tax between the sale of listed and unlisted shares, although the LTCG on all assets has been hiked to 12.5% from 10%. For the sale of unlisted shares, the budget marked a steep cut from the earlier rate of 20%. And in another significant move, the equalization levy, commonly known as the Google tax, has also been done away with. This levy was imposed on digital companies operating in India without a permanent physical presence. Additional positives for the Indian startup ecosystem include the 1,000 crore rupee venture capital fund for the space economy, the implementation of digital public infrastructure in agriculture proposals, or the Agri-Stack, to set up e-commerce hubs, and the launch of the Anushandhan National Research Fund. These are complemented by broader budget priorities like skilling and next-gen reforms in climate finance. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. Joining me now to talk about the impact of the budget, Mohandas Pai, chairman of Aaron Capital, Padmaja Ruparel, the co-founder of the Indian Angel Network, also with us Gopal Jain, managing partner of Gaja Capital, and Vishesh Rajaram, managing partner of Speciale Investor. Padmaja, gentlemen, appreciate you joining us here on the program. Mr. Pai, let me start by asking you, the measures that we just took our viewers through, the announcement on the abolition of the angel tax as well as the parity on listed and unlisted shares, that's probably the only thing that you haven't criticized in the budget so far, sir.
Shireen, I think it's good that they dropped the angel tax. We've been fighting it out for the last 6-7 years. And I think 2 years back, when they announced that non-residents are going to be subject to angel tax, it was a betrayal of everybody's interest because money from non-residents fell down. What Government of India does not understand is non-residents do not like to deal with the Indian tax authorities because there is no certainty and there is no proper way of assessment. Bringing in non-residents for the last straw. Money from overseas fell, and I'm very happy that is done. But there is one more agenda which I hope you will take up, Shireen. That is, all assessment proceedings on angel tax till now should be withdrawn. I just heard the Revenue Secretary say that maybe it will come under the Vivad Ke Samad or some other program. But the Vivad Ke Samad program is for people who have disputed tax, and they say you pay the tax, but we will not charge you interest and penalty. When you dispute the tax itself, we have the question of paying the tax. So I think they must withdraw all the cases which are there, withdraw all matters in appeal, so that we get a very clean start. And hopefully we see money coming in again. And that reducing the tax for unlisted stock is a fantastic thing. It's a fantastic thing because I think it will really improve the tax system. Except that please remember, loss. You held a unlisted company for 10 years, you made a loss. You could index it and claim the loss, right? Now that won't happen because the indexation is abolished. So there is some kind of a setback if you balance it out. But overall, reducing it is very, very good. And I think we're quite happy. We want them to remove all pending assessments and all pending appeals so we have a clean start.
I know you've been putting out a flurry of tweets asking the government to review its decision on doing away with the indexation benefits. I asked the finance secretary exactly that. In fact, I quoted to him what you had tweeted about grandfathering up until April 1, 2024. And at least the response so far is that there is no reason for us to review the indexation benefits being done away with. And there is no legitimate ask at this point in time for the considerations that you and many others have put forward to be taken up.
Shireen, I don't know what he's talking about. He must look at data. Income tax put out a tweet saying that real estate has gone up 12 to 16% a year, every year. That is ridiculous. I just saw a report by Kotak which said it's gone up 5 to 7% a year. I don't know where you get the information. It's gone up 12 to 16% a year. You must certainly see that. And I would like to say that indexation till 1st April 2024 will be a political decision. We are not elected the revenue secretary rule over us. We elected this government. It's an ask to Prime Minister Modi, and he has to look after his own constituency. The middle class is very angry and upset at the indexation. They're not able to understand why you're not grandfathering. Now, just now I read an article which said for CCD players, that is a cumulative convertible debenture which are unlisted. Now everything is going to be, taxed at normal rates. Now what we want is whatever the benefits of the law till now, grandfather it. Whatever you do, make it prospective, like Arun Jaitley did when he shifted the capital gains tax away from Mauritius, right? That was done beautifully. That's what should be done, because if you go on changing like this midstream and or people have already invested, it's a betrayal. They don't trust you anymore. The question to me of the trust that people have in India's tax system. First of all, there's no trust because they keep changing every now and then without discussing with everybody. And I would like to appeal to the Prime Minister and the Finance Minister that, look, there is a lot of anger. These are all your supporters. The middle class has suffered a lot because of high inflation, high fees, EMI going up, lousy quality of life in this country. Now you've done this, 12.5% is good. Everybody likes that. You have unified. But keep the indexation till 1st April 2024. So everybody cost goes up. At least one pain point is gone. It's not going to cost you anything. For example, Shireen, they just said that the extra tax at 12.5 will be 17,000. That means the total tax is 17,000 into 4. That's about 40 and 58, 40 and 28,000, 68,000. 68,000 on 22 lakh crores is a small amount of money, right? So if they index it, it's not going to cost them anything, but it'll make millions of taxpayers happy, who are all their supporters.
Will this now, Padmaja, remove at least one crucial irritant? I mean, this is not the only reason why we've gone through a funding winter. There are several other reasons why we've gone through a funding winter, but this has been a significant irritant. Now that this is out of the way, how much do you believe things are likely to change?
Yeah, Shireen, I think first of all, this budget does reflect that the startup ecosystem, the startups and investing, unlisted investing is center stage. We finally sort of gained a great amount of space in the budget. So that itself tells you the importance of what we are doing in the startup ecosystem, and want to really thank actually the finance minister for doing this. Angel tax, absolutely. We've been battling it for 11, 12 years. It was announced in 2011, 2012, and we've sort of battling it since then. So all I can say, angel tax, rest in peace. Thank you very much that this is gone. And with the capital gains tax alignment and other things that with the sectoral focused funds, I think there's clearly a path forward on which the government is moving to sort of unlock a lot of domestic money and also bring in FDI, except for what Mr. Pai just said, that we need to make it easier for FDI to come in. It's very, very true. Foreign investors don't come in. But, all of this can only happen for startups to really grow. There is capital and talent. Those are the two resources that are required. I think the financing or the funding part is starting to get solved. But what we were hoping, and we do hope that the finance minister and everybody sort of do focus on, is that we need to retain and build high quality talent. And for that, I think the ESOP piece is very important. We do need to solve the ESOP, where ESOP holders get taxed on sale of shares and not twice on exercise and then on sale. I think it's very, very important that all that is being unleashed for capital has to be utilized to build value and create startups of not only national importance, but they can go global.
How do you see this announcement for the space economy, this 1,000 crore rupee allocation that's been made?
Thank you. Thanks, Shireen. I think it's a big step, right? And I think it's important to step back and see what the quantum that's being set and the background in which it's coming in. In 2020, you had the space policy coming out. You had InSpace being set up as the nodal agency for private space to participate with ISRO. Earlier this year, you had the FDI policy that was opened up that's built clarity and a framework for international capital to come in and participate. And now with the government also bringing in a certain amount of capital on the table to say that they are willing to support private space startups is a very clear message that I think the space economy and India's ability to grow its share of the global space market, from 2% at about $8+ billion to about $44 billion in the next 10 years, which is sort of the prediction that has been put out by InSpace, is very real. I think they're really putting money where their mouth is. They're talking about this sector taking precedence. They're talking about this sector being a sector that India has capability, talent, historical credibility to build upon. From where we stand, looking at the investments we made in the startups that we meet, I think this is a very positive development, and will, of course, have a multiplier effect on more investors looking at this sector and also international capital coming into the country.
Outside of the big headline announcement, which was on angel tax, there have been several other pieces that the budget has touched on. For instance, that equalization levy, or popularly called Google tax, being done away with, which was not anywhere on the expectation radar. It kind of came out from the blue as a surprise. But on balance, how much does this move the needle in terms of sentiment as well as in terms of meaningful action?
In terms of sentiment, actually, you have to take a step back and look at the budget in its entirety. The biggest message from this budget is around policy continuity and policy stability. This was a big question on the minds of investors, given the recent election verdict. Fiscal consolidation continues to be the central pillar of the government's policy. This places India in a class of its own. And the biggest beneficiary of fiscal consolidation is the private sector, our entrepreneurs. Because the more the government contracts, the greater is the space created for the private sector, the less is financial repression. And slowly and surely, this starts showing up in the form of lower interest rates. So, the significance of this cannot be overstated. And India is really in a class of its own, especially given the fact that economies around the world are fiscally expanding, not fiscally contracting. So this is actually the biggest takeaway from the budget. We can talk about the numerous gives, in terms of angel tax removal, capital gains rationalization, what you talked about, the equalization levy. But actually, all of these, relatively speaking, the biggest takeaway for the private sector, the biggest takeaway for entrepreneurship in this country is that fiscal consolidation continues to be, fiscal stability, fiscal conservativeness continues to be the central pillar of this government's policy.
Now, I want you to put on your, former HR head hat, Mr. Pai, and talk to me about what you believe is the likely outcome of these schemes. I mean, this is not mandatory. It is a nudge with incentives, to the private sector to try and bring people on board to hire, as well as to try and skill people by way of an internship program. But the numbers, the execution, Mr. Pai, your take.
Well, I think it's a very good start, because for the first time in a long time, government has focused on job creation and skilling in a big way and put money on the table. So I expect the private sector to come up and participate. Look, in this country, job creation and jobs are the biggest challenge. We have 2.5 crore young people reaching the age of 21 every year, Shireen, for the next 10 years and for the last 20 years. And we have to make sure that at least 1.5, 1.6 crore are gainfully employed, or they'll be on the streets. The joint responsibility of business and government should, of course, spend money for training. Now, if this program is there, I would expect all corporates to participate in the internship program, hire a few hundreds, depending upon hundreds of thousands, depending upon your size, and really try to make a start. Because I think that the best way to do it, apart from apprenticeship, and I think it's a very, very good sign. I hope CII, ASSOCHAM, and FICCI come together and form a group along with government to monitor it. And I would appeal to everybody to do it, because we have to give back to this country in a very big way. Two, the idea to pay the employer's share of PF and ESR PF is fantastic. That's very, very good, because, we must have labor-intensive industries in the poorer areas where labor is coming off the ground, and this will reduce the cost of labor. And giving them a grant in the first 2 months is very, very good. We had suggested that give a grant of 2,000 rupees a month apart from paying for the PF for 24 months, because in the first 24 months of a new person coming for any industry, productivity will be very poor because they're untrained and unskilled. But they didn't do that, but this is very good. And the third leg also of making sure that you have policies for manufacturing. Manufacturing is also very good. I think the framework is there, but government has to work together with industry, with the chambers to make sure that they do it. And I would say, Shireen, it has to be a joint responsibility to industry and government. For too long, industry has sat on the sidelines pointing fingers. You know, Shireen, the IT industry has done this, Shireen. We got 5.6 million people working, and we have trained another 2 or 3 million people, right? We have created this industry. We have created the richest, best trained people in the IT industry in the world for the next 20 years. You've seen that. And remember that famous McKinsey report, he said by 2010 or something, we'll have 500,000 people shot. We should laugh at them. We created them. We spent $3 to $4 billion on training people. And we created this industry. And what is India is benefiting? $215 billion of exports, $145 billion of cash coming into India. Now the rest of industry has to do it. The LNG CEO said 35,000 people shot. Hey man, train 50,000 people a year. Start training for everybody. Don't cry about it. Go and train people, hire people, train people, build up this country.
You know, that's the perfect note to take a break here on, but I want to come back and talk about unlocking domestic pools of capital as well as what it will take to bring more FDI in with Padmaja, Vishesh and Gopal. Back in a moment on Young Turks after this very short break.